Yes, sir. I'm going to jump right in. And because there was some pressure in the market today, I'm going to go over Nvidia, which was not a winning overall trade. Now, we had some success with it trying to catch a falling sword and catch some bottoms. But overall, we want to cover losers and talk about how to manage them and our thought process in them instead of just going over winning trades. So a couple of things here. You're going to see Nvidia has been under a lot of pressure. Now, with the threat of raising rates a little bit sooner because the Fed speeding tapering, a lot of higher valuation names have been under pressure. So you have seen Nvidia on my 60-minute chart, by the way, seeing Nvidia pull right back in, very strong move from 325 into a 300 level at the end of the week. So it actually ended on Friday in sort of making this nice reversal, bouncing off of 298.5 or so was the bottom, and getting right back above that 300 mark. Last time it was in this price range and powered through, had some support at 97. You had a nice little sort of chop break to hold us above that $300 level. So those are the things that I was looking for a dip buy. That's where I wanted to see a turn. A couple of things immediately go awry. Lack of patience at the open is usually a big deal when you go to that first downside trade. And look, I just showed you looking at that 298.5 area that we're talking about, and then first violation was getting long in front of 300 because 300 is the round number. And you can't do things like that. If I like 98.5 as a bit of a level, and I like that 97 as an absolute bottom, well, you can't be getting long until it goes to that 298. So what ends up happening, we get too many shares at 300, we end up getting a stop, and this is actually a bad trigger because I put a stop in the wrong place, and then we get out way too early. We saw the bottom hold, I just jumped right back in because that's what you're supposed to do. And from this point on, whenever I'm doing a catch a falling sword or a dip buy off the open, I'm always going to want to scalp a portion out. The reason for this is if the trend continues to the downside, in this case it does, but it doesn't always. If the trend continues to the downside, I'm taking out a couple of dollars worth of profit on a portion of the position, a quarter, a third, and that does two things for me. It's banking some profit so that if it eventually breaks down, you lose a little bit less. Now, you're paying for that some other way, and that's, of course, if it does hold this level, instead of trending down, we get nice higher lows, and we bust out to 310, well, you have less shares on board. That's the price of scalping a little bit out at the beginning to make sure that you're taking some profit as you go, and essentially counter trend when you're going to be buying the dip. Now, things were going to plan. The second time it comes down to that 97 level, I let it bounce, show a little bit more patience, and then it comes a third time, it bounces off my level. I take the shares that time. It's now held that support, bit of a double bottom. Okay, fair enough. We get some out here in front of that, in between that 99 to 300 level, and we figure, okay, at this point, if we're going to break back out, next target, right up around 301, 302. But here's the thing. At this particular time, the market was looking relatively weak. So you had to have a notion of a hard stop. And when that 297 went, we simply got out. A lot of times, and I talked about this, and the reason I want to go over this trade is, look, there was no way that buying the dip was going to win. You could mitigate your losses by taking profit a couple of times and having a tight stop. And so overall, you're closer to a flat trade than ruining your day. That's what I wanted to show you. But the other part of this that's very important, if you ever find yourself with a level like that where it's clear out to you, you like it on the higher time frame, it's your line in the sand, and once it breaks this level, you see it then immediately end up as resistance only moments later, that signals a good idea for reversal. You don't have to reverse here, and you don't have to reverse here either, but when it puts in another test and rejects that level at about 96, suddenly that's a pretty good entry point. Now, obviously a lot of this is hindsight, so I'm trying to make sure that as I go over this, I would have done it on the train home, but as I go over this trade, I look at not just what I could have done differently with the long, but how could I have been with the trend, even if you're joining it late. It doesn't matter if you join a trend late if you're going to be able to work with that trend for a good size winner and a good risk to reward trade. In this particular case, you know you're out back at that 27, or if you're frisky, give it to VWAP. Plenty of downside room, of course. As you look back down below those prices, you've got a lot of runway to the bottom if we continue to the downside. So overall, Nvidia, not a winning trade trying to buy the dip here, but a lot to learn from it, and that's what it's about here at TraderTV.Live.